Finally, a lot of you are waiting for this video, so I'm going straight to teach you inducements. Hello and welcome to today's video, and as I mentioned earlier, we'll be learning inducements in today's video so you can understand how to trade inducements and how to have these high probability setups play out for you. So with inducements, you need to understand fully well that inducement is literally liquidity fueling price to your preferred point of interest. To your preferred point of interest, you have liquidity fueling price there. Before I continue with the inducement, I need to understand once again that this tutorial is brought to you by PeepPsychX, and our WhatsApp number is +2348055369615, and I, Investor Tio, will be your host for today. I'm going to be learning inducement properly, so calm down, take your time, and learn this concept properly. This is on our YouTube community. Do not subscribe to our YouTube community and turn on notification bell. We'll be dropping more quality updates on Forex, cryptos, and synthetic indices. All right, let's go into this trading world properly. Like and share. Let's continue. Now we have about 4 setups on our screen, so I'll be working with them as we keep on going. So they are not complete. I just dropped them there so you can see. So the name is model. All right. Setup one. Setup one. All right. These are setup one, so I can actually get the concept of liquidity properly. Now, setup one entails us working with trend line liquidity. Now, please don't ask what is trend line liquidity because I taught you in the last video. If you haven't watched the last video, you need to watch it. This is a series. Everything works together. Market structure down to point of interest, down to liquidity. You are working with targets, inducements. All right. So make sure you're following our contents properly. So this is a series. Okay. If you missed the last video, check it out. So yes, we have over here inducements, right? And over here we have trend line liquidity TLL. So just a little recap, trend line liquidity, this is the trend line right here. All right. Remember, we talked about structure and subtraction and the like. So in this particular scenario, we're having a trend line liquidity formula. Market showing you areas where the market touched the trend line. Okay. So this particular zone would have been somewhere here at the point. So people at this point would have taken about selling, right? What the market did, the market broke above them and went to a POI. Right, this is our point of interest, the other block around here. So the market doing this alone, all right, I show the market use liquidity and inducement concept to give us our entry. So what does this mean? This is where money is stacked. People are willing to sell here. The market cleared everybody out to buy movement until it got to a real region where it wanted to sell, a high probability region with our other block here, and then sold from here down. So if you had used this setup directly to trade, this is our sell position. You'd have made this percentage over here. So let's say our SL is above the other block, directly above the other block, and TP is the last end, the external average liquidity. You have made a 1:5 with this trade, clean and smooth. All right, it has a high probability of getting. So this target 2, this is another target, and this is what we're going to work with. This time around, we're not working with TLL. Here we are working with what? I believe we should know what we're working with from here. Okay, before I type that, what I'm working with, we're working with equal highs, right? EQH. So I think now I have to reduce the size. I increased the size earlier on, but I think it's big now. So EQH, cool. So we're working EQH over here. Now EQH means equal highs. Why EQL? If you watch our previous videos, the EQL means equal low. So we'll get to EQL soon. But yeah, EQH. EQH is literally a region where people expect to sell in markets too. So let me use. I'm trying to get this. This I have to come down so I can try to get it out. Okay, cool. So people would have expected market when it gets somewhere here to sell, right? Let's do this to sell. Let me extend this to people expecting market to sell when it gets here because yeah, it sold the first time to the second time. What the market do? The market broke above it to our other block over here. So it cleared all the money over here, the liquidity over here, collected everything, came back to other block here. That is our point of interest, whether it's other block, whether it's FVG, whatever is there directly the market want to work with, gets there and then directly sells. Right, so if you had worked with this concept, remember first one is trade line liquidity, second one is EQH, equal high. If you have worked with the second concept, all right, this is a sell. So we're going to be selling from here to stop loss above the other block, take profits, external range liquidity. This is another 1:5 move, clean and easy, rinse and repeat, and making money. All right, if I use these settings to trade on our Telegram, I'll show you some chart stuff too. Right, in our Telegram community, you know that we've been working with the signals on cryptos and the likes, so you should check them and trade too. All right, I'll show you some charts so I can still get it. But let's continue. Let me explain these 4 concepts. So this setup 1 and this other setup I'm going to be showing you is setup 2. Some people call it model, so I just had to change it to setup. You will notice I wasn't writing model initially, so I had to do something to change. decided to do something different today. So setup 2, this setup 3. Now setup 3 is an uptrend example. Yeah. And this time around, you can clearly see the market using this trend line liquidity. So people with this trend line liquidity, let me extend this. Right? If you're working with trend line liquidity here, normally we're expecting market to come here again and buy, right? Continue buying from here. What the market came down, collected all your stop loss order, and came down to this other block that I've rest here. The act of the market doing this is what we call inducement, right? This place induced the market come here, showing us that okay, people are here, so let's come down here and collect all their stop loss here as money and then buy from here. So the big ones actually bought from here, and we that are following the big ones because of our strategy, we use our long position right now. We'll buy from here. All right. Remember, we place our position 2 at the top of the other block. I've taught you this before. Okay. And then we buy from here with our limit orders, no market execution, limit orders. Then we target the external range liquidity. So if this was the external we were targeting, cool, we'd have gotten about 1:3.6 from this. It's still clean. Okay. So it depends on what the market offers today. This setup 3, then this setup 4, EQL. So let me write this quickly. I think I didn't write it here, that this is the TLL. So those of us that will take a screenshot afterwards, you understand what I'm talking about. Okay, this is TLL. Cool. So I think this text size is still high, it's still too high exactly. So this should be cool. This TLL, and here I'm going to work with EQH. All right, EQH. So basically this is going to be our EQH directly. Sorry, that's the bottom there, so that's EQL. EQL literally means equal low. EQ equal L low. All right, so I'm going to work with concept of equal low over here. Why is equal low? We can clearly see the bottom over there twice. All right, it can be 3 times, it can be 4 times, but yeah, that's equal low. All right, and when it's more, you start showing consolidating movements. Even that consolidation there and market breaking down to touch here can also be under entry model. All right, so it's just this inducements playing out there. So people that have wanted to buy from here, right, taking market will come here, and what guess what? The market put down and came down here. After coming to this other block and triggering from here, okay, would have entered a buy position from here directly. The market still went in that direction, but that's taking them out already. So they didn't make the money. All they had to do was just to watch the money go while they just cry in their rooms. So that's a crazy way market like doing it. Okay, and this is like 1:4, 1:3, anything on the them. So basically, this is setup with setup 1, setup 2, setup 3. Then clone this so I can screenshot properly and set up 4. Okay. Now the reason I'm doing this so I can understand this thing clearly. I've given you 2 ways that it shows for uptrend, 2 ways it shows for downstairs. If you are trading just inducement and making a lot of money, you can have up to 60% accuracy with this, up to, right? Which means it can be lower than that. Sometimes if in trading sample size of 20 trades, you can have around 50-something% accuracy, but trading like 1:3, 1:4, 1:5, you're going to be in profit and losses. So that's great. All right, so that's great. So this targets here. All right, in this main setup 1, setup 2, setup 3, and setup 4. So you can take a screenshot now. Take a screenshot now. All right, so that has been done. Now let's go to charts and let me show you how this played out, okay, or how we are working with it right here. So basically, these are current setup on near USDT. I expect the market to work around here. So basically, our other block somewhere here. I usually use the bottom other block over here after the break of structure and the rest. Okay, remember, those concept of break of structure and an uptrend, and yes, positive move. So I'll come back here. All right, I'm not explaining break of structure and another block again in this video. We've done that previous video. What I want to get is that yes, we're expecting the market to come down here, right? Normally, you want to use just the week. This time I decided to use 4 other blocks here, this zone where we have orders to enter, right? And then we saw that the market was making liquidity here. It made this move to this extent. So we're expecting the market to come back here to make the same move. All right. If the market comes out here to make the same move, come down, we've gotten this liquidity order here. Again, we can also read this, interpret this as this. All right, market doing something like this. If you see this pattern here, let me show you over here. We did it here. Coming up, it means market is going to break and collect all liquidity from it to come back to our other block. So the market comes down, expecting the market to come down now. Instead of holding here to buy, market should actually not hold here and buy, it should actually break it and come back to the other block before it buys to come back here. This is what we're expecting the market to do. All right, is it that the market leaves us behind without triggering our order? This order has been placed already. Okay, that trigger order, or it comes back to fill it. You can see concept I teach is what to trade with. It's very, very easy. All right, some people don't use this. You might not see trade line here. And I say, okay, their inducement is based on them waiting to see what's happening here. Some of us might have never entered yet. Wait to see the price react here. Price react here, they put their entry here and then watch. Someone like me, if I want to actually be really, really conservative, I'll just work with the extreme price range. But yeah, let's see how it plays out. Okay, so let's check out GBPJPY and see how we can trade GBPJPY here. Sorry, working here, mate. Okay, so this is GBPJPY, and I've been wanting to set up for a while. I missed my first entry with the inducements I tried using because I use that liquidity over here. So I've gotten my second entry position over here. So I'm supposed to enter right now. Okay, so this is a 1:6.5 trade, entering from here and then making the market all the way down. So let me see if I can get in on time and take this trade. So basically, let's see. So I'm going to be entering this GBPJPY and I'll enter my trades directly. Alright, so I've entered my position already here and we're observing how this market will play out over here. So we've missed entry from here already, so let me just delete this. So this is literally liquidity playing over here. Liquidity, liquidity, liquidity. So market coming down, right? You can see liquidity over here. And then we expect the market to move all the way down because it has induced from this equal high, clear liquidity over here. So under equal high over here too. The reason I've not deleted it because I made an SL move there, so I don't delete it because I'm using my analysis later on. And see under EQH go high, so there's money over here. Market came back here, clear this liquidity, hit our entry from this other block over here which we're utilizing, and then market is already moving. So let's see how this plays out, champs. Let's see how this plays out and see how we can get in for cool money with it. This is the 1:6. It was 1:5, 1:6, depending on how you arrange your SL and likes. And let's see what the market is going to do over here. So yeah, that's literally it. I've shown you a real life example. I've shown you an example I'm making in the chat right now. I've shown you what the market is doing. Although this market, this trade is a risky move because literally the market can do something like this. Everything's probability, right? Everything's probability. Can come back here. Yeah, you can use it as a breaker block to break to the upside and just keep on going up, collecting the liquidity over here as a buy position. And once it does something like that, yes, I'll be on the outlook for my buy entry. If it goes up, for my buy entry to come again from here, right, for me to buy from here. But if it comes all the way down, it is my TP and then buys from here, right? So we're expecting to do buy from here. So there are a lot of ways to analyze markets. Okay, if this trade hits LCL, we expect the market to retrace back to this zone. Okay, we have buying from, and if this hits LCL, we just to buy from here. So just like that, you just understand how the market plays out. That's why it's good to have 1:5, 1:6, 1:4 trade, so you have high probability of surviving the markets. All right. So just to go, Trump. Just to go. This is trading for you. This is literally trading. Alright, I'll see you in future videos. We'll teach you more. Join the channel and Telegram community for updates, like and share. And let's make profits together. Cheers.